Ladies and gentlemen, good day and welcome to Marksans Pharma Conference Call Q1FY22 hosted by Centrum Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Cinderella Carvalho from Centrum Broking Limited. Thank you and over to you, ma'am.
Thanks, Malika. Hi, Cinderella Carvalho. Welcome you all on behalf of Centrum Broking for the first quarter FY22 earnings call of Marksans Pharma Limited. At the outset, I thank the management of Marksans for giving us this opportunity to host the call. From the management team, today we have with us Managing Director and CEO, Mr. Marksans Pharma, Chief Financial Officer, Mr. Jitendra Sharma. Now I hand over the call to the management for their opening remarks. Over to you, management.
Thank you, Cinderella. Good evening, friends. Hope you and your families are safe and doing well. It's my pleasure to welcome all of you to the Q1 F22 earning call. Let me try and keep the prepared remarks short so that we can have more time to take your questions. The key highlights I would like to bring to your attention is the OrbiMed's investment in Marksans Pharma. We are very happy to have OrbiMed, a long-term investor, as a financial partner. I'm confident that OrbiMed's global reach and resources will enable us to make rapid strides in our business for the future. We remain excited about Marksans' forward-integrated business model with a global presence and are committed on driving value creation to all our stakeholders. Moving on to the business highlights, our regulated market focus has paid off and we've achieved a sales of 349 in the first quarter of this year despite the pandemic-led disruptions. We remain focused on organic and inorganic expansions in our key markets of US and Europe. Our ongoing plans for backward integration into API is on track and will offer us a leverage in terms of improving margins in the future. We are confident that our unique front-end presence and our capacity built up at our back end will keep us on path of achieving a turnover of 2,000 crores in the next few years. With this, I'd like to turn it over to Jitendra, our CFO, who will begin to give you a brief update on financials before we start our Q&A. Thank you.
Thank you, sir. Let me start with quarterly highlights. Revenue from operations for the quarter was 349 crores, that's a 5.4% on yearly basis. The growth was led by regulated markets. Despite pandemic-induced disruptions, EBITDA was at 77.3 crores. EBITDA margin expanded by 110 basis points on year-on-year basis to 22.2% in Q1 of FY22 on account of increased operating efficiency. Profit after tax was rupees 62.6 crores, an increase of 26.8% on YOY basis. PAT margin was 17.6%, an increase of 270 basis points compared to the corresponding quarter. EPS for the quarter was at rupees 1.51, a yearly increase of 25.9%. We continue to remain debt-free as on date, and our cash and cash equivalent in the books was rupees 225 crores as of June 2021. Our good results have been on account of increasing market penetration and higher operating leverage. We are cautiously optimistic that this momentum will continue and that margins will remain stable over the foreseeable future. The said margin expansion combined with lower interest outgo has considerably increased our PAT margin and consequently the return ratios. Our return on equity increased by 460 basis points on a yearly basis and stood at 25.4% as on June 30, 2021. Similarly, on return on capital employed also.
Sorry to interrupt, sir. This is the conference operator. Request you to speak a bit louder, sir. Thank you.
Similarly, our return on capital employed also expanded by 370 basis points and stood at 30.7% in Q1 of FY 2022. We incurred a capex of 9.9 crores for the quarter ended June 21. We still continue to invest in enhancing our capabilities and making ourselves ready for the future. India is witnessing gradual unlocking amidst reduced number of COVID-19 cases in the second wave and a higher vaccination rate. As a result of our fiscal forecast is stable, and I'm cautiously optimistic that we will be able to maintain the pace of conducting business as we move ahead. With that, I would like to throw open the floor to Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We would like to remind participants that you may press star 1 to ask a question. The first question is from the line of Nimish Sheth from GT Advisory. Please go ahead.
Yeah, hi. Can you hear me?
Yes, I can hear you.
Oh, okay, great. Congratulations. Decent numbers given the tough quarter. I just have a question relating to the fundraising that you've done. You have issued these warrants and received the money. Is that what has happened?
We have received the money. Since it is warrant, we have received 25% upfront payment already.
Okay. So now the question is, what does an optionally convertible warrant mean? If they do not want to convert, do we have to return the money to them? So it's like a debt instrument?
No. It is not optionally convertible. It is compulsorily convertible warrant, and it will be converted within period of 18 months.
Okay, no, because
it doesn't have any debt obligation.
Okay, noted. And what are we going to use this money for? Because we already have a very large cash pile. So we now have a total of nearly 600 crores. The 365 that we've raised for them, we won't count the money that Mr. Saldana will give, but and the cash that's already lying on our books. So what are we going to do with all this money?
So we have obviously we are exploring inorganic growth strategies. We are also investing substantially on capex. As we speak, we are in dialogue, of acquiring a plant. So we have also our API integration that we are talking about. So it's on multiple folds. Again, it is the fundraising is to get us to another level, to basically ensure we have the resources to basically fuel us for our next growth strategy, which will basically involve both capacity, backward integration, and as well as inorganic acquisitions. In terms of rupees, it sounds very large, but in terms of dollars, it's still very very small. So I mean, acquisitions do not come cheap, and even if you look at plants or you look at manufacturing capacities today, you need some deep pockets to basically get us to that level.
Okay, but the focus of the company will continue to be an export-oriented pharmaceutical company. We're looking to continue with that current strategy that we have.
Yes, pretty much 100% of our revenue does come from the export market, and we will continue doing that for the next 3 years.
Okay, noted. Thank you. Thanks.
Thank you. The next question is from the line of Survi Sarogi from Smith Capital Markets. Please go ahead.
Hello. Hello, am I audible?
Yes, ma'am.
Yes, you're audible.
Okay. Sir, my question is that in your press release, you have mentioned that we have achieved a sales growth of 5.4% despite pandemic-induced logistics issues. So I just wanted to know how much sales growth we would have achieved minus the effect of pandemic-induced logistic issues.
It's difficult to extrapolate, but obviously, we have challenges that we had to overcome. These are, when you talk of a pandemic, you talk of logistic issues. These are things which are beyond our control. It would have been a much more robust, quarter or a sales call that you put it, or earning call than what it is, a bit subdued. But at the end of the day, we are still very optimistic on our roadmap. We are still very bullish on our goals and targets. But definitely, for the quarter, we did have some challenges in terms of the pandemic situation that is revolving around logistics and everything.
Okay, sir. That's it from my side.
Thank you. The next question is from the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Yeah. Hi, sir. Good evening to everybody, and congratulations on decent set of numbers. So firstly, I wanted to ask you about your earlier comment you made about reaching 2,000 crores in a few years. In the earlier calls, we've had interactions about the timeline of touching this 2,000 crores. Given the fact that we touched 350 crores odd in this quarter, don't you think we'll be touching this number by the middle of next year itself, or probably by the end of this year if things normalize in the next 9 months?
Listen, I would like to have a bit longer duration in our outlook. If we do achieve it, it'll be great. It's difficult to see how things unfold. There are certain circumstances or certain situations, where are not within our control. The pandemic situation, coming. We are in uncharted territory out here where, certain countries are coming out of the pandemic but still are going back into a third wave. So a lot of inventory management, a lot of logistics, a lot of supply chain challenges remain in demand and supply situations. So it's difficult to actually, because these are not normal times, and I think it's difficult to predict how the market trend will be. But I do believe that things are only improving. If one has to look at it 2 years when we got into a pandemic, I think there is a bit of clarity. But the second and third wave, the Delta variant, has put us into a bit of a tailspin as to uncertainties. But at the same time, we do believe we are on path of achieving our objectives. Our growth strategy is still very much there. Our business outlook is still very robust, and we do believe we will achieve those objectives. We've always maintained that we will hit those numbers within the next couple of years. So I wouldn't want to give a statement that we'll do it in the next 12 months. If it happens, it's great. But at the same time, we are on path. Our focus is on 2,000 crores.
Right. Just in addition to this, don't we have order book visibility? If you could just mention a few points on order book for the balance 9 months or whatever we have. Also, secondly, I wanted to ask you about the gross margin contraction for the quarter. It's come at about 300 basis points lower than last year. I understand might be some raw material price challenges, but have you been able to pass on, if at all, yes or no? And if yes, then is it with a time lag?
So the gross margin has reduced. We saw some great gross margins last year, but the gross margin has reduced. We've always predicted it to be around the 52 to 55 range. Anything above that is always a bonus, but it has come to a level of 52, 53%, and that prima facie is because of the cost of material, cost of raw material, cost of packing material being inflated. I do not know whether I do believe it's a short term because oil prices have gone up. So there are a lot of intangible things that have inflated prices of packing material, raw materials, and all that stuff. But I do believe it's not going to be a long-lasting thing. So it's difficult for us to pass on something which is going to be short-term, unless if it drags on for a longer period, then we'll have to reevaluate it at that time. So, but right now, we are at at the gross margin that we have declared, but we do believe it will be range-bound between 52 to 55%.
Right. And sir, the order book visibility, if at all you can share something on that?
The order book, our order book is pretty much, we will hit our, objectives. Like when we talk of US, we are basically looking at $100 million. Our order book is over $100 million. So we are expecting to hit those numbers. So the order book looks like we will be on we will achieve a growth maybe this year of maybe 15% if things go well. But again, these are very early days to give a year-end statement.
So just a clarification, this 15% is on overall company level growth?
Yeah, I would assume it will be overall company level. It may touch 20%.
Right. So last one, if I may just squeeze in, you mentioned in your opening remarks that a lot of this 5.5% growth has been led by market penetration. If you could just give a sense of how much market share we have across our products or a basket of products in the US and Europe.
We've got over 300 products in Europe, and we've got over 100 products. It's difficult to actually give you a percentage, but there are certain products in UK where we enjoy even 60%, 65%. There are certain products we enjoy 5% or 10%. But we have got into market penetration. Obviously, our focus is on to all the products. It's not only we are not dependent. It's quite a diversified portfolio we have, so it's not dependent on any single molecule. US, as a matter of fact, we've got a long way to go in terms of market penetration, which makes us more optimistic that there is a growth potential, as and when we do penetrate the market.
Right. I have a couple of more questions. I'll get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. My first question is, in the first wave in the US, we, I believe, sold a lot of pain management medicine. So with the Delta variant being very, very pervasive in the US right now, are we seeing an uptick on that side? And what's the color on that, if you can just talk about that particular trend?
No, I don't think there is a big uptake on any. There is a big movement, as a matter of fact. If you compare it to the previous years, although there's a Delta variant case, but more people are vaccinated out here. So in the US, and effectively, while cases are going up, but I don't think they are hitting all-time high compared to the previous years of when the pandemic actually broke out. The number of serious cases are much lower than what historically it was. So I guess you do have milder cases happening, and you do definitely have more serious cases. The Delta variant is much more. The people who are not vaccinated are much more vulnerable on that. but I don't think the uptake has increased any uptake demand presently. So I think it is pretty much there. Pretty much normal.
I see. Okay. And then the second question is that some of the companies are reporting pricing pressure in the US, and since that's a very large market for us, if you can tell us whether we are seeing that as well, or why we are not seeing and some of these guys are seeing it.
Again, it just depends on the focus, but we are not insulated or protected by market dynamics. If everyone's seeing it, then obviously everyone is finding the pressure. So are we. But at the end of the day, I'm more optimistic. I do believe this is a passing trend, and this is the nature of the beast, and it happens in year to year, period to period. But it's like a wave which comes in and goes, and we just have to take it within our strides. But we are more focused on to our potential. We are not saturated in terms of our market penetration. We are on a growth path. So obviously we do not have that impact because we are looking at a big leap in terms of our sales, or at least we are aiming to hit another milestone in our revenue. So I think for us, we would like to be more positive and more focused on to our strategies than to get bogged down into things which are pretty normal in this industry.
I see. So we didn't see any price deterioration in the last quarter, in the June quarter. Is that what you're saying? Just want to confirm I heard it right.
Pricing pressure is always there. There may be a couple of molecules here and there that have got into pricing pressures. The cost of material definitely has gone up for the quarter. And again, like I explained to the gentleman before, that these might be short-term things that have, because of circumstances, revolving around it. So, but there's definitely been cost impact in terms of raw material, packing material, even the freight costs have gone all-time high because of the oil prices. So these all have impacts on bottom line. In terms of top line, while pricing pressure may be there on a couple of molecules, and again depends on your basket, you may just be lucky that you don't face it.
I see. And my last question is on the EBITDA margin side. Given what we posted in the June quarter, what is your outlook for the rest of the year?
I've always presented an EBITDA anything above 22% is a great EBITDA, and if we are, I do believe we will maintain that, or we may slightly grow on that. But obviously, we have seen some great EBITDAs last year, but I would like to be a bit more conservative and reserved when I say we should be able to do 22 to 24% EBITDA.
Okay. Thank you very much. And if I have more questions, I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Ritesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. You just had a couple of questions. Given our product mix, which is more OTC and software focused, etc., is there a little bit of a less pricing pressure than what some of the other generic companies will be experiencing?
Sorry to interrupt, Mr. Gandhi. Our voice is breaking, sir.
Sure. You can hear me now?
Yes, it's much better.
It's quite garbled. I can barely hear you, but please go ahead, and if I can get it, I will reply back to your question.
So I think the question was, given our focus on OTC and soft gels, is there a less likelihood of us facing a sizable pressure than some of the other generic players out there?
No, I think pricing pressure is a normal phenomenon in this industry, but definitely certain molecules may witness higher pricing pressure. Again, depending on which company has got more exposure onto what molecules, and based on that, you may have a molecule where you are very dependent on in terms of revenue, and if that molecule does come on pricing pressure, then obviously it gives an impact. But I think again, pricing pressure, no one is no one is spared or no one is insulated where there's a pricing pressure. Pricing pressure normally comes with supply chain issues, which again, like I mentioned earlier, the pandemic, because it all depends on demand and supply situation. When the country is coming out of a pandemic or coming out of the cases were very all-time low out here in the first quarter. So the feel-good factor was there, and people were not sick. People were vaccinated. So obviously, cases came down. So obviously, there was less demand and oversupply. And again, now we're talking of the third wave. So again, there's a bit of a mixed basket on how to act and react. So it does have a supply and demand situation, which where then the pricing pressure does come in. But at the end of the day, again, it's more molecule specific and it's more item specific. I cannot say for certain which item may find a pricing challenge tomorrow. But again, I do believe it's a part and parcel of this industry.
Got it. Is there any...
Mr. Gandhi, sir, your voice is still breaking, so I would request you to move to a better reception area, or else you can rejoin the conference, sir.
I'll rejoin. Thank you.
Thank you. The next question is from the line of Danish Mistry from Investment First Advisors. Please go ahead.
Yes. Hi. Good evening. Thank you for taking the time out. Just a couple of questions from my end. One is that if I were to see quarter on quarter, your gross profit margin has come out. You did allude to some raw material pressure, but is it also anything to do with a product mix? That's number one. And number two is that if you could give us a sense on which kind of geographies aided in our growth, and where do we see growth coming from in the future? Is it part of our UK operations which have been doing really well, or is it from our US operation? Thank you.
So I do believe all our territories, all our markets have performed well. So the UK, the US, everything. The growth driver, I do believe US will still be our growth driver moving forward. But at the end of the day, the gross margin is not exactly related to a segment specific issue. When you talk of packing material goes into pretty much any segment, and you have packing materials going up by nearly 20-30%. You have so many other inputs costs, excipients costs going on up. So I think that has some impact on the gross margin, definitely. Whether it's going to be a short term, it's going to be a long term issue. Obviously, these are all more driven by oil prices and petroleum products, which are basically driving up this cost. Tomorrow, oil prices come down, and you'll probably see the correction all over again. So I don't believe it is product specific that has led to this reduction in gross margin. But I do believe it's more the phenomenon that we are seeing out here of increase of all-round cost, including freight, which is not exactly gross margin, but everything has gone up.
Got it. Also, if I can just squeeze in one more. question is that, our key geographies which are there, are we launching any new products or new molecules where we could see a ramp up in our revenue? That's it. Thank you.
We have, in US we have a target of filing. We have about 5 ANDAs per year. This year we'll be launching towards the back end of this year. We plan to launch at least three products, new products. In UK we have launched 2 products, and we have another 5 or 6 more products that we plan to launch. We have a basket of over 20 products in the pipeline for UK, where we are filed and are awaiting or in the process of filing. So we have a whole segment in UK that we are now focusing on, which we do believe in the next 2 to 3 years will add tremendous value to our bottom line and top line. So we are working on all-round strategies in terms of fueling our growth in these markets, and then we also are pursuing different geographies and expansion in different territories and geographies to basically get us to another level.
Got it. Oh, thank you so much. Thank you.
Thank you. The next question is from the line of Viraj Mahadevia, an individual investor. Please go ahead.
Hi, congratulations, stable results. A question for you, Mark and Jitendra, is you mentioned there's some escalation in some of these cost line items that are beyond our control, particularly freight and packaging. But what about the raw material price escalation? Can you throw some light on what happened in this quarter? And then number 2, what are the strategic initiatives we are taking to address this in the future through toll manufacturing or getting into APIs, and when does that benefit actually kick in, timeline-wise?
So, in terms of raw materials, obviously it is quite a substantial amount of raw materials. I've seen a price increase. Paracetamol, acetaminophen raw material is one of it. A lot of excipient costs have gone up. There must be like 40 or 50 items that basically that go into making a tablet. Cost has gone up. These are way beyond anyone's control, and this is more of a global phenomenon. It's not country specific. It's not India specific or something of that stuff. We are seeing it all over the place. Packing material is again something, starting from bottles to IFCs to cartons to blisters to everything, foil, everything has gone up. So now this is again, I would like to say it is a demand and supply situation. It could be also because of petroleum products or because of oil prices going up, freight has gone up. We can only address certain things which are within our control, and that's the active raw materials that we are backward integrating ourselves into. We do plan to file 2 DMFs in this financial year, and we have maybe 3 more DMFs that we are planning to file by early next year. That would basically, so you're looking at 2022. Towards the early part of 2022, we'd probably be fully backward integrated or fully integrated with our own raw materials. That would help us to leverage some pricing. Help us to get the better pricing, and more important, it'll help us to have more sustainability and reliability on sourcing.
Understood. So FY23 onwards, I guess once all of this kicks in, financial year 23, is when you will have potentially more stability around your gross margins and less influence, at least by external raw material environment. Is that correct?
Yes.
Is that correct? I didn't hear.
Yes, that's correct.
Okay. Thank you. All the best.
Sir, your question is answered?
Yes, absolutely. I said all the best. Thank you.
Thank you. The next question is from the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Yeah, thank you for the follow-up. Sir, coming to US, if you could just mention what is the concentration on top 5 or top 10 products right now?
I would like to more restrict on segments. So our main segment is still our pain segment, because within the segment we have like 30 odd products that we actually focus on. So our pain is still our major focus on presently. Then obviously we are getting into gastro segment, and that is again we are we do plan to grow and focus onto that GI segment basically, and then last but not the least, then we'll come to the cough and cold part of it.
Right. So if, overall basket level, if you can just quantify top 5 products or top 10 products, if they have a major concentration on the US top line?
There is no single product that stands out. We are pretty much, even in terms of, you talk of products doing 10, 12 million dollar range, and you're pretty much there with all products contributing. It's equally. So we are not very dependent on any single molecule, or there's nothing that stands out which says, this particular molecule gives us 50% of our revenue. So there's nothing that actually stands out presently.
Right, got it. So from capacity standpoint, if you can tell us what is your utilization right now, and do we need, so basically in the last earlier calls you mentioned about 200 crores of capex that will go to either 80 crores of backward integration, 120 crores of formulation sales. By when should we expect these capex to come on stream, and is this going to be taking our top line to 2,000 crores, or it is going to be fueling growth over 2,000 crores?
Both. It is going to assist in getting us to 2,000 crores, not fueling our growth to 2,000 crores, but it's going to assist in basically debottlenecking some of our capacities, because obviously it will put a strain onto our present infrastructure if we don't take action, but it will also fuel us beyond 2,000 crores. So we are looking at a manufacturing plant based in India, and that manufacturing plant, once we acquire, it's again approved, regulatory approved plant. You need to invest money to increase capacities. We would like it to eventually replicate in terms of what we are doing with our main plant in Goa. We'd like to have the similar capacities. So when you investing into that plant after acquiring it, then obviously you're looking at revenue beyond 2,000 crores. But it is not an overnight thing, because once you acquire a plant, you need to do site variations. You need to basically get your products, developed out there, or stabilized out there. Stability have to be conducted. So it's a bit of a process that one has to go through. And it's not something that you acquire something and you'll achieve your objective in 6 months. It's basically a year and a half, over a year and a half outlook.
So is this acquiring new capacity over and above 200 crores, or is this part of the 200 crores?
No, it is a part of 200 crores.
Got it. Sir, earlier also, so basically I just wanted to understand, so after all this money comes in completely, and with the operating cash flow and cash balance that we have, we'll be having roughly around 750-800 crores of cash in the balance sheet. Earlier you had alluded to roughly around 1,800 to 1,000 crores of capex, R&D, backward integration, all those initiatives, and that would be taking us to a top line of about 4,000 crores. So, I mean, if you could just give some sense, that's a longer time frame that I'm talking about. But if you could just give us some color as to whether are we talking about these numbers or it is just Hello, am I audible, sir?
Yeah. Okay. There was a lot of disturbance. So this is obviously a quarter earning call, and one has to be more focused onto the quarter and the year. When you talk of 1,000 crores and of investment and all, this is a bit more longer term outlooks, where we would need to invest into multiple forefronts of getting into infrastructure, into inorganic strategies to get us to another level.
Yeah.
So that investment is needed for us to hit any numbers beyond those, and that is where the fundraising was done with that outlook of taking us to another level. So when the fundraising was done, it's basically done with the outlook of beyond 2,000 crores.
Fair enough. Right. So, sir, if you can just give some color as to, what sort of acquisition are we talking about in terms of either the size of the target or the return profiles of the target? Are we looking at 30% ROC business, or if you could just have in geography or the kind of therapies that the target company has, if you could just some color there, please.
So we don't have anything concrete to discuss presently, so it's difficult to speculate. But definitely geographies we are planning to expand and evaluate. We are looking at Europe, pan-Europe markets. We are looking geographies besides Europe to expand our presence and establish. But it's difficult to give you a return on investment outlook presently when we have nothing concrete to discuss to mention. But every acquisition has its own integrations, challenges, and everything. We have done quite a few in the past, and they've all done pretty well over time. So, but if something comes up, then definitely we will basically discuss this with in our next Concall or whenever it does come up.
Understood. So basically, I'm trying to understand the working.
Agarwal,
No problem.
I would request you to rejoin the queue, sir. Thank you.
Sure. Thank you so much.
The next question is from the line of Deepak Jindal, an individual investor. Please go ahead.
Hello, am I audible?
Yes, you are audible.
Yeah. Congratulations on a stable set of results, sir. I just have, one question around the sales growth. So we just said that the pandemic has kind of bring in a lot of issues on logistics, which kind of impacted the sales growth. So the question is, had pandemic would not have been here, what would have been the kind of sales growth that would have achieved? I mean, maybe not on the quantification of this, but maybe a bit of a color around that. Had it been a normal quarter, the sales growth would have been higher than this.
Had it been a normal quarter, it's difficult to predict how the outcome would have been, but it would have definitely, we would have expected at least a double-digit outlook growth, or year-on-year maybe 15% instead of a 5%.
Okay. And sir, how exactly this, what sort of logistics issues were there? Was it an availability of container, or, there were some logistics issues from the US front as well?
Logistic issues is again availability of containers, availability of transportation, cost impact, availability of material reaching on time, raw material reaching on time. Logistic, actually it's a little broader than logistic. It is basically supply chain also involvement out there, where it has an impact on if material comes late because of containers coming in from, let's say, China or Europe or whatever. definitely it has impact on production and deliveries according to that. So it has a bit of a supply chain involvement along with the logistics. It's not just simply shipments,
Understood, sir. And sir, did the situation improve month on month? Let's say, how was the situation trending in July and August?
The situation is pretty fragile, but we do believe a better quarter in July, in the second quarter than the first quarter. We do believe it's going to get better, and I think assuming that the second quarter will be better, I think the third quarter will be better than the second quarter.
Thank you so much for the answer, sir. All the best. Yeah, little bit. Yeah.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Sir, my question is, our second quarter may be better in terms of revenue, but then in terms of cost, it may not be better because, as you told, the prices of all the raw material has gone up. So effectively, our margins will get affected, our PAT margin will get affected, and ultimately the profit will be affected. Is it okay? Correct?
That's a very valid point, and it could very well be that, but we would like to be more optimistic in terms of things improving. But if things don't improve, there will be impact on bottom line. But again, we are more optimistic that things will only get better.
Okay. Thank you very much. Thank you.
Thank you. We would like to remind participants that you may press star 1 to ask a question. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Viraj Madhavia, an individual investor. Please go ahead.
Hi, Mark. Now that you have OrbiMed on board, how do you see yourself using them in terms of strategic direction or decision making for growing or taking Marksans to the next level? Will they help you source acquisition targets in the developed world where they are very strong and have strong networks? Are they helping you source technologies and platforms for novel drug delivery or the like? Can you throw some more light on that, please?
Obviously, we are very hopeful on acquisitions because of the global reach, like you rightly said. They are present in markets that we are very keen on, so their global networking would come in handy for our inorganic growth strategies. But it's also it's the intangible benefits that they get onto the table in terms of brainstorming discussions, advising strategically on M&As as well as financial planning and and fueling our roadmap. So they being on the board, I think it gives us it strengthens our board outlook, and I think they will get a lot of their global influence in terms of evaluations and experience onto the table, and it does help. It adds tremendous value, and we are hopeful that we can leverage a bit of their strengths into our main objectives of inorganic strategies.
Great. And lastly, given the spare cash and the fact that we don't currently have acquisition targets in mind, we continue to generate cash, even if we deploy an API or a plant or whatever else, is a buyback some point down the line or dividends on the agenda? I know you may not be able to do a buyback immediately given your recent share issue, but returning cash to shareholders, is that something on the agenda?
Yes. I mean, we are not averse with anything, and we have discussed this internally also. So we are. I think it's only a matter. It's basically timing, but definitely it's it's something that we are not averse with, and we will take appropriate steps at the right time.
Okay, great. Thank you.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Yeah, hi, good evening, everyone. Just a few around soft gel. So what's the current share of soft gels in the overall revenues, and what's the utilization of a Goa plant?
The share of soft gel, in overall revenues, right now it is around 25%.
Okay, and what's the utilization of Goa plant?
Capacity utilization of Goa plant is around 75%.
Okay. It is the same 2.4 billion unit one that we are talking about, okay, for soft gel.
Yeah, we are increasing it to 3.6 billion by this year.
Got it. And in terms of US ANDA filings, can you talk something about, are there any complex, niche, or high value items there, and specifically any soft gel ones?
We are getting into niche delivery systems. Soft gel, there are only a couple of them, but they are more solid oral tablet or pelletization pellet products, which are extended release, bilayered type of delivery systems. But definitely we are getting into a little more complex molecules, but at the same time it is more segment focused, so we are working on those grounds.
Okay, got it. And these two oral solid modified release that you mentioned, are they large categories or low competition large categories, or anything you can share about their economics?
No, they are big value drivers. They are not small molecules. We are hopeful that at least one of them will be, we will be there among the top 2 or top 3 to market once it's operated. The other one has generic market, but because of the complexity of the molecule, we would like to be more prominent out there.
Excellent. And when do you expect the approvals for these?
Are you looking at somewhere around maybe third quarter of 22?
That's calendar 22 or fiscal?
Calendar 22.
Got it. Yeah. Thank you so much.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you all for participating on this Concall. Please be safe, and my regards to everyone. Take care. Thank you.
Thank you. On behalf of Centrum Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.